Hey everyone, I'm Corin, your Dallas Realtor here with a September market update. Before we get into the video, if you need help with anything real estate related, please don't hesitate to call, text, or email day or night. I love talking with people about real estate, and I've helped people all over the country move to the Dallas-Fort Worth area. Okay, let's get into it. What do we have going on in the month of September? So first up, we have rates, which are sitting around 7 to 7.5% on a 30-year fixed rate mortgage after the Fed raised the rates back in July by 25 basis points. This puts the Fed rate at 5.25 to 5.5. Just crazy to think about when you consider that at the beginning of 2022, the rate was sitting at 0. Which is an all-time low, by the way. Now, you've probably heard a lot of agents, mortgage brokers, and maybe even some economists in the market talking about how they think the rates will begin going down before the end of this year. The Fed had previously indicated that they might increase rates one more time this year, but many people were doubting that that was going to happen. Well, the Fed just came back and decided to pause rates like many people had anticipated. My personal opinion is that we likely aren't going to see any interest rate drops at the next few Fed meetings unless we see any instability in the market. The reason that the Fed lowers the rates is to assist in economic growth, protect the job market, and keep inflation in range where the Fed wants it. Inflation is currently sitting around 3.6%, which is down from last year's 8.2%, but still a percentage point higher than the Fed wants. The Fed has also indicated that they want to see the job market soften in order to help lower inflation. So lowering rates would have an opposite effect to what the Fed is currently looking to do. For this reason, I don't see interest rates dropping over the rest of this year, and most likely not until mid to late next year at the earliest. However, economic conditions can change this outlook. My advice would be to go into the rest of the year with the assumption that the rates are going to stay the same at least until spring or summer. Evidence for this goes back to 2006 when the Fed paused rate hikes at 5.25% in July of 2006, and they didn't begin reducing them until July of 2007. Keep in mind that by the time the Fed began lowering interest rates in July of 2007, two of the largest hedge funds in America had already collapsed and the housing crisis of 2008 was in full swing. This is when the Federal Reserve policy of quantitative easing began, which is essentially a concept that the Fed took from Japan's playbook. This policy is why you'll notice interest rates after the 2000 financial crisis have remained relatively low for most of the last decade. For most of the last decade, we've been at a near zero Fed rate with the exception of a few years between 2016 and 2019 when rates went up slightly. Rates only began to return to what is more historically normal after the COVID pandemic in order to control runaway inflation as a result of excessive quantitative easing and increased government spending. As you probably heard, America has experienced high inflation before, most recently in the 70s and 80s, but at that time it was more a result of excessive social spending in the 60s and 70s. This, combined with oil shortages and economic adaptation away from manufacturing, is likely what brought on inflation during that time. One risk that should be on your radar is if the government lowers interest rates too early like they did in the 70s, we could see a renewal of runaway inflation, which would require rates to go up even further in order for us to control them. The Fed has the historical data and is likely trying to avoid repeating these mistakes. This is why, unless they feel it is necessary to protect the economy from collapse and they are sure inflation is holding where they want it, they're unlikely to begin dropping rates again anytime soon. Something to keep an eye on is whether the Fed's going to hold this hawkish stance that they've had on monetary policy over this next coming year. They may reverse back to quantitative easing early as in a false sense of optimism. We have seen from Jerome Powell a tendency to backpedal when it comes to being conservative with interest rates, so it wouldn't be outside the realm of possibility for the Fed to begin lowering interest rates too quickly. The important thing to take away from this, though, is at the end of the day, we live in an inflationary economy, and the last thing you want to be holding too much of is cash. Keep most of your assets invested in something, whether it's a money market account, in bonds, real estate, or the stock market. Given the uncertainty in the economy right now, make sure you're keeping cash more accessible in safe investments in case the market does experience a downturn, and build up some reserve funds so that you can weather any economic storm that may be coming. So how is the Dallas housing market looking right now? Well, let's take a look. Okay, so it's important to note that every market's different, and that's why I want to go over the Dallas housing market specifically, and we're going to look at a few different stats. The first thing we're going to be looking at is days on market, and what that's currently sitting at is 22 days on market. If you can see at the peak of the summer, we were at 18 days on market, and if we were going to go back to last year, we were at 6 days on market. So this is like the hottest the market's ever been, is at 6 days on market on average. That means if you list your home, 6 days later, you're under contract, you're in pending, you're going through closing. So right now we're at 22 days is the average on market. And if you look at historical data, if you want to check that out, so if we're at 22 days, you can see throughout most of history, we're in the 20, 30, 40 day range, right? So like in the peak of summer, 22 days, peak of summer, 15 days, 13 days, 13 days, 17 days. So at 18, that's a pretty normal market. I'd say it's healthy. It's not a buyer's market, it's not a seller's market. But we're definitely not going into a crash, and we're not seeing what we saw during the peak of, where prices were just like going through the roof when it was 6 days market. So we're likely to see this number continue to go up again going into winter, go back to like 30, 40 days on market, and then go back down again next summer. It's just like, that's the ebb and flow of the cycle of, the yearly real estate cycle. The percent of original list price that houses sell for, which is currently, as of August, is 97.6%. Now if we look, just break it down a bit closer, we're at 97.6%. And then in May and June, we're at 98.5%. So like when we had the housing correction began, it was at the end of summer of last year, you can see homes were selling for 102, 103%. And then they started dropping, at the end of summer, they started dropping off as interest rates went up. So interest rates went up, we went into the winter, the two things that, tend to cause housing prices to fall. And we saw the housing prices fall, 95.3% of original list price. So people are obviously adjusting their prices down, but they were also not getting what they asked for on average. So that was the worst that it got. And then you see it picks back up as we're going back into summer. And like as people adjust to the new normal of the interest rates being higher. So here we're at 97.6%, and it's important to note if you are somebody that's looking to buy like a starter home, maybe a 3-bedroom, 2-bath home, I want to show you this. You can see that the percent to list price is like much closer to 100. And it's obviously not 100, but it is closer. And the reason for that is that there's more competition in the starter home space where, housing prices are lower. Because you're going to be competing with investors, you're competing with a lot of millennials that are starting families right now. They're trying to buy their first home. So the competition there is more fierce than the market as a whole, once you take out those, 3,000 square foot, 5-bed, 4-bed houses. So just keep that in mind. You don't have as soft of a market if you're looking at buying your first home, buying a starter home. So something, between that 250 to 300, 250 to like $400,000 range, like this is the kind of market you're looking at versus the general market. Or you might go to like 3,000 square feet and you can see like it softens even more, right? 96%. And you can see like it softened the most compared to the market as a whole. So just to give you guys an idea of that. Let's see, what else do we got? So other than original percent, we've got the month's supply of inventory. And currently, if we're looking at the 3-year mark, we've got 3.2 months supply. This is considered like an even market. So it's not a buyer's market, it's not a seller's market. It's a pretty level market. This number is beginning to go up, so we may start entering something more resembling a buyer's market. But as of now, we're in a pretty much like a level market. So we had a seller's market back in 2022. As you can see, like we had, the average month supply was 1 month, 1.2 months going back those years. But if you look at the historical data on it, we usually have 3 to 4 months supply. That's like the standard here in Dallas. So even if you go back here, like you go back to some, the early 2010s, you can see like 2 months supply. So that's kind of where we're at 3 now. We were back at 2.6 earlier this year. So that's pretty standard, unless we go over 4 to 5 months, like once we get into 5 months, that would be considered, that's when you want to start worrying. 5 to 6 months is a buyer's market. So right now at 3.2 is for the whole MLS. And again, if we look at starter homes, we're at 2.5. So the market for starter homes is still more competitive on this metric. But yeah, so that's pretty much all the information I have right now. If you look at sales prices, I guess let's check that out real quick. So we're at 375 average across MLS. That's also softened a little bit since July. We had that extra rate hike that happened in July. And obviously we're ending summer, so people who are trying to get a new home before the kids go back to school, that kind of happens between May and July. And then you see housing prices soften in August, and that's pretty standard to see housing prices soften in August. You can see it happened here too, from July of 2022 to August. And then if I go back let's go back to like 2021, you can see the housing prices stayed steady in 2021. This is like at the peak when housing prices were still increasing. So this is very abnormal. But here's the 5-year data for housing prices. You can see like you go back to 2018, we're at 231, and now we're at 375,000. So like the housing prices have gone, just gone kind of crazy lately. But yeah, even if like for those people who are thinking about the pandemic and like the average drop, Dallas isn't the kind of market, like it's not Phoenix, it's not Seattle, it's not San Francisco. You're probably not going to see a huge drop here in Dallas. So like go back to 2008 when we had the housing crisis, right? Our peak was 154,000. It dropped to 136,000. Like that's not that big of a correction when you think about it. Like that's basically the same as what we just saw right here, right? So we saw that 400,000 to 350,000 drop, and then we like rebounded, right? So we'll probably see like a little lower here and coming into winter. So if you are looking to buy a house soon, like a great time to buy is in winter if you can find a house that you like. So just keep that in mind. It's always a good time to buy during winter. If you don't mind shopping a little longer, it's hard to find the home that you want. So we're heading into the fall and winter months when real estate tends to slow down, so expect to see a slight slump in home prices as well as active listings on the market. This is a seasonal change and a lot of people mistake it for the beginning of a housing crash, but remember, this happens every winter as buyer demand dries up while people are on holiday. You also tend to see a similar seasonal drop on the stock market when people go on vacation. Given that the Fed froze interest rates, we may see the market flatline during the slow period rather than drop. However, if at the next meeting they stay frozen on rates, you can expect some volatility in the market, as the market is currently expecting rates to drop a little bit. I wouldn't expect to see any sudden pricing crash in housing. Inventory is still at record lows, which will continue to keep housing prices steady. But it's also very important to see that while inflation has gone down, we're still sitting at 3.7% annual inflation this year and 6.5% through 2022. This is another reason we're unlikely to see housing prices go down this year, because the cost of building new continues to rise and new builds are not keeping up with the demand in this market. If anything, housing prices will remain flat over the next year while inflation brings home affordability back in line. This will be further supported if the Fed does choose to lower rates, even by a few basis points. Anyone who is telling you that housing is going to see a 20, 30, or 40% drop any day now is just not looking at fundamental data to back that up. There are far too many homeowners who are locked in at low interest rates with low payments compared to what they had back in the 2008 financial crisis. We also have record high home equity, whereas in the 2008 crisis, people were leveraged to their teeth. So unless we see a major issue elsewhere in the economy, it's unlikely we're going to see a substantial drop in housing prices anytime soon. I'd anticipate housing prices to remain flat or slightly down going into the winter, with a small to moderate increase going into next spring and summer if interest rates remain at their current levels. Now, if you're considering purchasing a home soon or you're waiting for the interest rates to drop, I would give you some caution against waiting, because today you have an advantage in that many sellers are willing to make various concessions, such as making repairs to the home, pay down your rates, cover closing costs for you, and you have the time right now to decide if a home is right for you before you put an offer on it. If rates do end up dropping in the spring and summer, you can expect to see a flood of buyers onto the market who have all been waiting for the same drop in rates. This means that you'll be dealing with 5, 10, 15 buyers per seller like you were back during the COVID pandemic. The advantage of buying now is getting to buy with less competition, getting better terms from the seller, and if rates do go down over the next 1 to 2 years, you can refinance that mortgage to a new lower rate. Now, as always, I advise you to exercise financial caution, so do not go buying a home or getting into a mortgage that you cannot afford for the long term. And if you aren't in a good position to buy now, there's no harm in waiting and saving for when the time is right for you. But if you're simply waiting for the market to change, now isn't as bad of a time to buy as you might think for the various reasons I mentioned. So that's all I got for you this month, but if you want this monthly market update a week before everyone else, please join my mailing list in the description below, or you can shoot me an email at corin@twotowersrg.com. I send just one email a week with exclusive information about the Dallas market, including this monthly market update and urgent news, so you're always in the know about what's going on here in Dallas. We also provide our mailing list subscribers with an exclusive spreadsheet with everything that's going around the Dallas-Fort Worth area. So if you're looking for somewhere to take the family or go on a date night, it's got all the activities that you can think of in the Metroplex. If you have any questions or are looking to buy and sell in the Dallas-Fort Worth market, please don't hesitate to reach out day or night. I'm always happy to help. Before you head out, please subscribe and like the video. It really helps this information reach more people. And if you've got something you want to talk to me about in one of my videos or my next monthly update, leave a comment below and I'll get back to you or make a video about it. And before you go, check out my latest video about the pros and cons of buying new builds versus resale homes.